Back. Good morning, everybody. Happy Friday. This is the morning show here on Stock Market TV. Spencer Israel, and I'm joined today by a couple special guest hosts. We got Jason Pers back in action. He was with us on Tuesday, and Larry Thompson will stop by in probably around 9 o'clock or so. And so me and Jason and Larry, we're gonna hang out. We're gonna shoot the shit. JC and Steve are either still in New Orleans or they're traveling back from New Orleans, and I know they had a good time based on the many pictures that I saw. I'm sure they will talk about that on Monday's show. You'll have to wait for that. No, Rudy, no baby yet. You'll know when there's a baby because I won't be around for a while. That's how you'll know. But no baby yet. And Louis in New Orleans. I don't know if Louis is going to stop by today, actually. They are an hour behind us, which for Louis shouldn't be a lot because normally Louis is like 15 hours ahead of us. So I guess I should shoot Louis a message, see if he's awake. You never know with these events. They're out late the night before, and who knows? I don't know anything. So maybe Louis will stop by. It is Crypto Friday. We probably should talk about a little bit of crypto. We need to give Louis his flowers for his Ethereum. He's been pounding the table on Ethereum for weeks now. So credit to him. Okay, I got Jason Pers here. We'll bring him out, and then we'll bring Larry out eventually. And let's see what happens. Mr. Jason Pers, good morning.
Hey, what's up, Spencer?
How
Glad to be back, man. A lot to talk about today. Speaking of Bitcoin, I wanted to also add, I heard you say something about crypto. Yeah, crypto's amazing. Ethereum, definitely, Louis hit it out of the park. That was really good. Nobody was talking about Ethereum. This is an interesting one. He's got a very interesting take, so you guys should definitely check that out from Louis' page. But Bitcoin, if you look at the 104, it's 104,569. If you look at that level, basically 104,600. If we get above that level, I think this thing can really take off. So I definitely like the look of Bitcoin here. So if you guys are asking for Bitcoin advice from me, which you're not, I would say, hey, number one, I've been trading. A lot of people don't know this, but I've been in the crypto space since 2014.
I don't think I knew that.
Yeah, a lot of people don't know that. I was a big crypto guy. I mean, I was a big crypto bull because the same.
How were you buying Bitcoin in 2014?
Mount Gox.
I was gonna say.
Yep, I was part of the Mount Gox thing. I lost some money there, but that's part of it was part of the game. And then you kind of learn, okay, well, what do I have to do? And at the time, it wasn't a ton of money in there.
Yeah.
So it wasn't a big deal, but it sucked. It was a big hit. And then you start to figure out, what do you do with your money? Okay, cold storage. What do you do with this? And then Coinbase came out. Coinbase made everything so much easier. And so a lot of people are hating on it. Oh, it's so, commercial. I think Coinbase was the biggest savior for crypto ever because it made it safe. Back then, it just wasn't safe to buy anything. It was really hard to, you basically you bought it from friends, you traded it between people. That was the best way to do it at the time. Now you can go to most of these exchanges. There was, Bitfinex was another one.
Yeah.
Bittrex was another one. So there's a couple good ones out there, but Coinbase was the most trustworthy. So, but still, I definitely like the look of it. I've been running trend models on it since about that time in 2013, 2014. So trending up, still looking for a new breakout to an all-time high. It had a great false breakdown signal. It never really got below the 40-week moving average. So I really like it. I think it can move up higher. I think it can get above that. Also, another thing to talk about is elections. So election years, if you go back to 2016.
Okay, didn't know we were going here.
Oh, we're going. We're going. We're gonna take the crypto for a second. We're just gonna go with it.
Yeah, I'm with you.
So if we go back to 2016 election, the 2016 election when Donald Trump gets in, you see kind of a band squeeze breakout that happens in Bitcoin. You go to 2020, you see that Biden comes in. You get a band squeeze breakout in Bitcoin once again. And then Trump gets elected once again. And then you get a band squeeze breakout once again. And we had that band squeeze breakout that happened, back in November, right before it started before the election and then continued after. We got us up to, 105 closing on a weekly basis. Now we're just kind of trending sideways. But normally when we see that move, we see a lot more upside in Bitcoin. So I do think that Bitcoin is probably heading a lot higher. I think, at least 120 is probably a chip shot from here. If we get above 105, it's just going to probably skyrocket to that point. So a couple bits of analysis on Bitcoin. Love the intermarket analysis part of it. And it's also telling me that there's liquidity in the market.
Wait, did you have Bitcoin up on your charts the whole time? I don't know if you did.
I did. Yeah.
You did? Oh, wait a minute. My bad.
Yeah,
wait a minute. So this is what you were just talking about? Okay.
Yes. So this is the level I'm looking at. Perfectly clear level. This is looking at a weekly chart on a closing basis, and it's just bouncing around that level at the moment. If we get above that level, I think this thing's going to take off to the upside. Probably not look back anytime soon. So I really do like this idea here. Also thinking about when I see Bitcoin moving, I also think about the S&P 500 moving. So if Bitcoin's moving to the upside and Bitcoin starts breaking out, I'm pretty sure the S&P 500 will hit all-time highs pretty soon.
I could also draw the same. I could take the same exact chart, but just draw an arrow going down, right?
But no, see, here's the difference, though.
Okay,
you can, and anybody can. Yeah. However, it's in an uptrend. I want to always bet the other direction. And number two is I'm waiting for it to get above that level.
Okay.
So I still have a long position in my portfolio the way it is. It's very long term. So you get higher highs, higher lows, or false breakdown signals. So I would still say this is an uptrend. So I would be betting on more upside here. And yeah, if you want to fade it, you're a short-term trader, you want to fade it down to maybe 90, sure, go for it. But I wouldn't bet against a trend, just something that I don't do. So I'm looking for that to break out.
Nice. So wait, say it one more time. It was 104 what?
104. It's 104.5, 104.6. So basically, right around that level, you get a breakout.
$1,000 away.
Yep.
Right.
You get that breakout. This thing is not going to stop, and especially if you get a weekly close. Let's say it closes the week up there. Man, this thing's going to take off. Or a gap up Sunday night in futures, it'll take off.
And then you say Bitcoin breaks out. What about the S&P 500? I say Bitcoin breaks out. What about every other crypto? Right down the line, how far down the line you want to go? Right. I mean, what are the odds that Bitcoin breaks out and the other cryptos don't? Right.
Yeah, and then Ethereum would follow. All of these things would follow. I think it's very positive for the whole space in crypto. A lot of people look at the Bitcoin dominance and go, oh my gosh, it's going to be too dominant. And then these aren't going to move. I don't think that at all. I think this can absolutely move. And the rest of the sector can move. There's enough liquidity out there at the moment. And I think it also takes the S&P 500 a little bit higher. It would show more risk on coming into the market. So I like it for a lot of reasons here. But really, if you don't have a position today, wait for it to close above those levels. 104.6 would be the safest one. And then we'll see where we get from there.
If anyone wants an update on Spencer's shitcoin portfolio, I've called it a little bit. I've got 5 positions now. I had like 8 or 9 before. I am down 50% or more in 4 of them. And the last one is Fartcoin, which I'm up 164%. So I got 1 winner and a bunch of losers. That's how it goes. I feel like, and this is all play money for me anyway, so it's all fun.
That's the secret of trading, though, is like you're never. That's just why when people go on Twitter and they're like, "Look at my great trade," and they're like, "Here's this one trade. I bought options on this and made a ton of money." They could have 50 other trades that went to zero, and then that one trade that they're screenshotting. But in a portfolio, if you just are losing a little bit on your losers and then you have a couple huge winners like Spencer just did, it pays for all the losers. So it's a really good strategy, and you got to diversify your bets in the crypto space. That's something that a lot of people don't talk about. But if you're in the altcoin space, diversify, because you never know which one's going to be the one to really take off and the one that's going to be a laggard.
And just to be fully transparent, just to be clear, I am in the red in this shitcoin portfolio. I sold some of the ones that I was down like 99%. Right. That being said, the Fartcoin gains have paid for like 2.5 out of my 4 losers right now. Right. So come on, Fartcoin, keep on going. Right. Let's go. All right. Anyway, speaking of Bitcoin, maybe we can segue into this. I was taking a look, as I do, because I know around the middle of May every year, it's not just my birthday. It is also 13F deadline day, and I like to look at 13Fs and see who's doing what. And the Berkshire Hathaway one always interests me. So New Holdings, NU is the ticker. They are one of these newfangled fintech companies down in South America. They got a lot of Bitcoin on their portfolio. That's the connection I was making there. Berkshire Hathaway exited their position of New Holdings. They sold all of it in the first quarter. They also sold all of their Citigroup holdings last quarter. So no more Citi, no more New. And I thought that was interesting. Because first of all, it's Citigroup. I mean, I feel like Berkshire has owned Citigroup since the crisis. So I think they have. I thought that was kind of an interesting thing. They also exited. There was one more that they exited. It was a Capital One or Discover. It was one of those. But there's some merger there. So. No, Capital One they trimmed a little bit, but Capital One's buying Discover. New additions. There are no new additions, but they did significantly add to their holdings in Constellation Brands. That's STZ. So we're looking at liquor and beer. Constellation is the owner of Corona, I want to say, and Jack Daniels, if memory serves. I haven't looked it up in a while, but I feel like it's. You know what? Let's look it up right now, rather than just me be wrong. Because now I want to know.
Look at that bottom there.
Constellation Brands. Oh, they own. Sorry, I said Corona. I meant they own Modelo. They own Modelo. They own. They don't own Jack Daniels. That's Brown Foreman, right? They own Mi Campo. That's what is that? Tequila. They own. Modelo is the most popular beer in America, by the way.
Is it really?
Yeah, I don't know if you knew that.
I've been drinking a long time. It's been.
14 I was right. They do own Corona. Yeah, they own Corona and Modelo, and some.
The commercials make Corona and Modelo look the same, though. Are they very similar?
I mean, I like them both.
Okay.
Those are like 2 of my favorite beers.
Yeah.
So,
interesting.
Anyway, so Berkshire increased their stake in Constellation Brands by more than double. And then they also increased their stake by almost 150% in Pool Corporation. Ticker is Pool, Pool. They also, did a little bit of extra buying in Domino's and Sirius and.
But real fast before I move on to Pool,
look
at this chart. That is a beautiful breakout. This is a weekly chart, so this is going back all year. It's been consolidating. Now it's kind of breaking out of that base.
But don't a lot of charts kind of look like this?
The good ones are bottoming out. It's kind of like what JC always talks about. Like we're doing is kind of buying similar patterns over and over again. This is a little bit more short term than we normally look at. But once again, it's like this is still kind of consolidating. It's making a new 50-day, 100-day high. That's usually pretty significant. Could see some upside here.
I just think a lot of charts, especially like if you look year to date, look like that. I mean, this one actually looks kind of similar if I just look at the right part of the chart. It looks no.
I mean, it's more the fact that we really don't have any. There's no time in there. It's just a spike bottom starting to reverse. Very choppy pattern. If we go back to what was the last one now? STZ. There we go.
Yeah.
If we go back to this one's at least got some time on its side. It's got the last 6 months. It basically started this year. consolidating and now breaking up higher. So I'd like this one better than the other one, but once again, it's a tough one. Either one's not the prettiest chart, but I would rather buy STZ over this one for sure.
Selling Pool Corporation before the summer. I'm sure that's all priced in. The seasonality there, the market's not stupid. The market knows people are buying stuff for their pools in the spring and the summer. So, yeah. My growing up, we had a pool, but it was pretty old, and I would get dragged to Leslie's, which is also public, LESL. I would get dragged to Leslie's with my dad every other week for goddamn pool supplies. Nightmare fuel. Anyway, well, what is this? Oh, this is the seasonality. Yeah, okay.
Seasonality. Yep.
So
a little bit different than I would have thought.
Well, actually, it's a lot flatter than. Actually, no, this makes a ton of sense.
It's pretty steady, surprisingly.
Right. Wait, what are we actually looking at here? What is this a measure of?
So this would be 60% of the months or 60% of the time in January over the last 30 years. It's been up.
Okay, yeah, this makes sense. The market knows. Sure, the revenue does not look like this, but like the market surely understands that this is a seasonal business.
Yeah.
Right. So yeah. Okay.
I used to do Inground Pools when I was a kid. My mom had she was like, I'm going to teach you a lesson, Jason. And I was like, what did I do? Because I was doing bad in school. I was acting up. And she was like, you're going to do Inground Pools with your cousin. And I was only 12. And so I started digging Inground Pools at 12.
It's really hard, isn't it?
Oh, it's terrible.
Yeah.
I got to week 2, which I was supposed to only do 2 weeks, and they handed me money, like so much cash as a kid. Like I was like, oh my God, this is great. And I came home and my mom was like, what are you doing? I'm like, oh, I'm going to go to work next week. Look at all this money I made. And I was all excited about it. And the plan for her didn't really work. It was supposed to get me to go, you got to take school more seriously, Jason. And I was like, you know what? How much money I'm making just doing Inground Pools. So I just did Inground Pools for a few years after that.
That's funny. Turns out you liked money. Who knew?
Yeah, it's funny.
All right, a couple more things I want to hit on, and then I want to let you kind of talk about some stuff in commodity land. Man, I wish Steve were here for this, but we'll talk about it on Monday. Novo Nordisk, NVO, the CEO is stepping down. This is a stock that went from 50 to basically 150 in the span of a little over a year, and now this morning is back down to 64. So it's in a 60 something percent drawdown from its all-time high. Absolutely brutal. Stock is down this morning. So it's always funny when you see this, CEOs leaving. Sometimes the stock goes up on the headline. Sometimes it goes down. In this case, it's going down. But again, it's just one morning, and it's not even down. Not down a whole lot, but nonetheless. So I just thought it was interesting when you see a stock that's in a huge drawdown, and the CEO is like, "All right, peace, I'm out of it." Kind of like UNH, but UNH has some other legal stuff going on there. There's some lawsuits and some DOJ investigations, and but I just think that's interesting. So Novo Nordisk, not today. Maybe one day, not today.
There's so many things like that in the market right now, and it makes me wonder about if something happened in February to April. So basically, if you're looking at funds, some funds are so extremely leveraged, you guys wouldn't even believe it.
You're probably right.
I had a fund that was so leveraged that a 10% move would have wiped out most of the client's money. Some of these guys get so insanely leveraged that it's insane. And so, I wonder if something happened to some funds back in April, because a lot of the trend funds, and Spencer, can we bring up the slide deck?
Yes.
I've got slide 4.
Give me slide 4.
Give me slide 4, guys. New slide 4. All right. See, I'm in the hot seat today.
There we go.
So this is Mulaney chart. So Mulaney is, for you guys who don't know, Mulaney is one of the most famous trend followers. He's had a fund for many, many years. It's very volatile. He runs a high volatility fund, but he has huge returns because of it. And so he's in a 50% drawdown right now. So not 40, 50. So he had a 40% down month in April, and add that to what happened in February, and now he's at 50% down. And so part of the reason why I like to show this chart is, one, you guys are all traders out here. And some people who are traders go like, I need to make this much a year. I need to make 100%, 200%, and so on. The best don't make 100% a year. They have like Mulvaney's had some years that are 100%, but some years are flat, some years are down, some years are 20s, and he's averaging about a 20% return since its inception, which is phenomenal. That's a really, really good return. Warren Buffett's even had 50% drawdowns. So I'm sure part of the reason why
he's had several of them.
Several, yes, several. So this happens to traders. So importantly, why I'm bringing this up is I've been talking to traders, and some of them have been having a tough year, heavily invested in tech stocks or in the United States, trying to buy dips, and they've just been getting hit. And then by the time the market bottoms, they weren't in it anymore. So for you guys having a tough time, the market doesn't care. You can make the next trade, and that next trade can make money. So continue to just put on the right trades over and over again. And just like Mulvaney's chart, see how there's plenty of volatility times. So like plenty of times where there's lots of volatility, huge drawdowns, and so on. But you're going to hit new highs again. And I bet the next time we look at this chart and I bring it up, he's going to be hitting new highs once again, and everything will be fine. So once again, just kind of saying it's a good thing to look at if you're looking at drawdowns, making some sense of it.
Since you mentioned drawdowns, I was curious after Mr. Buffett announced he is stepping down as CEO, and I was like, I wonder what his biggest drawdowns were. So I looked it up, and I put together a highly scientific spreadsheet. I want to bring it up right now. This is just from my own notes here, but I only had data going back to 1979. I didn't even have all the data. It was going back to 1979. And yeah, he had 2 50% drawdowns in the same decade, no less, right?
Wow.
And this is the greatest investor and money manager of all time, right?
Yes.
And still he couldn't avoid it. So if he can't avoid it, what are the odds that you and me are going to avoid it? You know what I mean? Or anyone's going to avoid it. It's it's going to happen.
Drawdowns are part of it. And that's the other thing. Like when you look at a stock or look at Bitcoin, best example, most volatile asset in history. You look at Bitcoin, this thing goes up like crazy. Everybody wants to own it because it goes up like crazy, but the drawdowns are huge. Sometimes you have 80% drawdowns in Bitcoin.
Yeah.
But people don't think about that when they're trading. People, when they're trading, they think, if I'm good at this, I'm never going to have a drawdown again. But you have to have some volatility. For example, you can take a fund and cut out all the volatility of it. People do this all the time. They cut it out. They go to, hey, I'm going to go to a 5 vol. I'm going to go to a 10 vol, meaning that they're only going to take like the 10% drawdown is going to be their average. And then once again, when they're in those actual trades, they're not actually making real money because the positions are so small. Maybe they make 10% but they'll only lose 10%. It kind of wipes itself out at that point. So I think that a good way to think about it is just understanding that you have to have volatility to make money. At least 20% drawdown should be kind of normal in your portfolio if you want to make money.
I think the Bill Wang Archegos blow up from a couple of years ago was for someone like me who does not come from the institutional world, an eye-opening thing to see like how one firm could get so over-levered to essentially 2 stocks. It was at the time it was Viacom and crap. It was Discovery. That was the name of the companies at the time, and they have since merged and whatever. But if you look at the chart of WBD, you can see a ridiculous candle from 2021. Was it? Is that when this happened? Yeah, all the way up to $78, and it was going up every single day for weeks and weeks and weeks, and no one could understand it. And then, oh yeah, it was just one guy and his firm and his fund blew up, and it was all leverage with those 2 stocks. And that was like, wow, people can do that, and they can get like infinite leverage seemingly. Right?
It's crazy because once your fund, you have the ability to get a little bit more leverage, not a little bit, a lot more leverage.
a lot more, I think.
And so like you'll see, and the same thing with futures, you like if you start trading futures, you realize you get a lot of leverage, but the way to actually trade it is to understand like leverage isn't, you can use leverage, maybe 2x, but some people go straight 10x their portfolio. And once again, same with options. If you're really doing the math for options, you're not just trading a small amount. You're trading a very large amount of times that could be larger than your portfolio. So speaking of options, here's another one for you. Did you see about Michael Burry?
I did.
Yeah, I don't pay much attention to this, but it's something to bring up.
I did.
Yeah.
I wish I had a or maybe I can ask ChatGPT to do it. I want to track all of like his public commentary for the last decade, or all of his activity with his port, because he has been wrong basically the entire time. He's wrong almost always, right? But tell us what he just did or what he just said.
So if you're looking at his portfolio, you're looking at, I think it was like 97% of stocks he sold, and then he started to buy put options. Now they said like it's his biggest position. It's not. It's just options, so there's leverage. But he's taken out a short position on, I think, NVIDIA and a couple other names, China, Baba, and so on. So he's kind of ready for this crash that's going to happen in his eyes. And same with Jamie Dimon's coming out talking about possible recession still. There's a bunch of people kind of on that side still, which I like. That kind of says there's probably some more upside to go. And not saying Burry's always going to be wrong. Every bear is right at some point. Like you will get it right. If you short you see newsletters that do this all the time. They go, "We've never missed a crash." Well, if you're short all the time, of course, you've never missed a crash. But you've lost a lot of money in the interim. So I think that Michael Burry has a very interesting story. He's actually a very smart guy. Some of his trades have been really, really good and timely, but mainly he's long. And that's the thing a lot of people don't know. Every once in a while, he buys some put options or takes a trade like this, but he's long a lot of the time, even though he talks bearish every time.
Yeah. Didn't he also like sell everything a couple years ago, or
just a year and a half ago? Yeah, he sold a lot. He did kind of a similar thing, bought put options. I think it was on SPY at that point, sold a lot of things, and it was near the bottom of that market. It was right around the banking crisis in 2023, or the banking crisis. It was very short-lived, very quick. But once again, it's this is the thing that's important. Find the people that you pay attention to them, and then also take your own strategies and then use them, and try to block out the noise from Twitter and all of these random things that are just going to mix everybody up, get everybody confused. Because people look at it, here's a quick thing. They look at it like new traders. Okay, you're a new trader. You think Michael Burry is much smarter than you. Therefore, I need to do whatever this guy is doing. He's much smarter than me. And so you just do it, and not understanding like, hey, this is his strategy. Hey, he might be able to wait 3-4 years, just like in The Big Short, for this short to happen. Most of us don't have the staying power to do that.
Or the other side of that, as the chat's pointing out, he's already out. This is from the end of March.
Yeah, he could already be out.
This is from at minimum a month and a half ago. At most, math. What's math? 4.5 months, 5.5 months.
Yep. So he could literally just be out already. And that's the thing that, like, when people look at the 14Fs, think about only time you should really pay attention is if you're looking at someone like Buffett, very long term. Okay, he's probably going to hold on to that for a while. If it's put options, you're right, Spencer. He could have just gone, "Oh, Liberation Day, I'm out," like, which is what I would have done, what anybody else would have probably done.
Yeah, actually, that's a really good point. Okay, mental note to myself to actually double check what Burry's 13F says next time to see if because you know what, now that you mentioned it, it would make a lot of sense for him to be able to like buy like short-term puts, into Liberation Day and just like make bank and then, be done with it. But
I'd like to see his returns, over the years again, just take a look at it. But yeah, let's do some work.
Right.
That'd be a fun one.
Let's come back to this in 3 months and see how he made out. Before we bring on Larry Thompson, do you want to talk about commodities at all? We were looking at gold this morning, which I mean, you've talked about this a lot. We were looking at you and I were looking at the 10-year down over 1%. Anything? I know you went live yesterday for the gold rush. Anything you wanna highlight from that?
Yeah, chart 6 on the deck. But yeah, we went live yesterday. And basically what I'm always doing is looking across the global markets and trying to get an understanding of what's going on. And so something that's very significant to me is always this ratio. And when this gets into the danger zone, highway to the danger zone, you guys know the song. You should. If you don't, that's very sad. Yep. Spencer knows it. Okay. That's all that matters to me.
When that song comes on, when I'm running, I want to run through a brick wall.
Yes. It is amazing.
Yes.
So highway to the danger zone, we're right there. And so what this signifies, so if you go back to the oil price and hitting single digits, this was in 1999. Oil went under $10 a barrel. Everybody was like, it's the end of oil, the end of the world, new technologies coming in. Remember, it was the dot-com bubble, so everybody thought we would come up with a different type of technology for oil. Granted, that wasn't true. Oil ended up in an uptrend for many, many years until it peaked at around 140, 150 during the great financial crisis. That was in 2008. Then we go to the oil front month goes negative. That's April 2020. Oil hits negative $50 in the front month futures contract. That was the best buy the rumors, sell the news event ever. So basically what happened right there was a good time to start buying oil. Oil then just trended higher. Then we get to Russia, Ukraine. That's where oil peaked around $130. Russia-Ukraine crisis happens. If you guys remember, stocks actually were going down that entire quarter in Q1 2022. Oil, commodities, everything were just ripping, and those peaked at around that same time. We entered a bear market in 2022 at that time as well. And then we started to trend higher once again in stocks starting in 2022, October 2022 to be exact. So stocks started to move higher. Now we're back into that danger zone. And what's interesting is oil's negative here. Oil's in single digits over here. And now oil is nowhere near those levels by any means. We're above $60 in oil. So looking at it here, and we're all the way back up here again, I do think that this is a scenario where oil could start to pick up. I do think that stocks could start to slow down a little bit, or at least oil would be the outperformer. This happened in 2020 through 2021 into 2022. I think this could start to happen again. Once again, there's no buy signal for oil right now. I know a lot of people keep asking me about that. No buy signal for oil besides a reversal model signal, meaning we had a false breakdown. We could just see this thing trend up to 80. But for me, oil has to get above 80 to really be very bullish on this thesis. But the other thing about gold is that gold always rings the dinner bell on the cycle. So gold has been in an uptrend, a massive uptrend that everybody has seen for over a year now. Usually within a 10-month to 16-month period of time, oil and the rest of the commodities start to come to life. We already saw copper come to life. Now we're just waiting on oil, and then that could get us into the energy stocks and so on. So once again, it's a wait and see on the energy sector, but I still like the idea of looking at these things, having these things on your radar. Some of the copper miners look phenomenal. I know Steve had a trade on in FCX that looks great. He's killing it. I'm long FCX. It's a great trade at the moment. And then not to mention copper, which got shaken out from above $5 all the way back down again. And now it's all the way back up to almost $5 once again. So if we're looking at the whole commodity sector, we're definitely seeing that there's a possibility of energy picking up once again.
The thing is, there's no signal until there's a signal. Right?
There's no signal until there's a signal. So be careful. Be careful.
Yeah. All right. Good stuff. We got Larry Thompson in the house from Hostile Charts. Let's bring him out. Larry, do you have any charts? If so, that may have been one of yours. I don't know. All right. Let's bring Larry out and see what's on his mind.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr.
Yes.
Thompson. Wait a minute.
Oh, your
We
mic's
can't hear
off.
you. You're on mute. Oh, not good. No bueno. Something's wrong. Oh my God, Larry, you putting like 15 charts in this deck. We're gonna get through a lot of these. Okay, I'm gonna move them all up though. I'm gonna move them all to the
Yo.
top of.
Oh,
Yes.
we got you.
He's here. What's up? What's
Am I
up?
here?
How we
What's up,
doing?
Larry? Good to see you, man.
Are you complaining about too many charts?
No, I was not complaining. I was merely observing. I was taking it back.
I'm teasing. What's up, guys? Good to see you, Jason. It's been
Good
a
to
minute.
see you, man. I know. I was like, Larry. Spencer was like, Larry's coming on, and I was like, yes, awesome, excited.
Yeah,
to have you on here, man.
Got back, headed
And we
out
wore
again to
matching
Missouri. There we go. Headed back to Missouri next week, but I was back Friday, so love it. I actually got some international in here too, Jason. I wanted to talk through with you, but
let's do it.
yeah, but kind of want to started with Spencer. Could we pull up that S&P 500? You're moving the slides
yes,
around.
we
That
can.
first chart.
Yep.
Yeah, I kind of wanted to talk here. I know Jason kind of just talked about the bullish thesis, and obviously I agree with a lot of that because of price, right? So if you're looking at price, there's going to be agreements, and typically it just comes down to time frame. But the reason I like looking at this chart, and then we'll kind of couple it with the next couple of charts, is I think there was a lot being made around the 200-day for price action without the context of price action around the 200-day. And so people were being cautious around it without observing, right, the all-time high AVWAP that we already got back above. You know, the 20-day EMA that was serving as support, that 560 level that we already got back above. RSI was already back in bearish regime. ADX line, which is something I don't see a ton of people look at, but it's something I use for trend following signals. It basically gives you a directional analysis of the uptrend versus the downtrend. But you have the positive directional analysis overtaking the negative, which is the first time this has happened since, you know, last year. And so you had a lot of strength entering that 200-day. And I think you had a lot of people wanting to kind of trim there. And that's where we kind of got this ripper through. So Spencer, if you go to the next chart, I'll then shut up after looking at the next chart. So with that context, the thing I wanted to highlight here was the S&P 500% above 20-day moving average. So we're around 80 right now, which, right, not bearish, but it's something to be aware of in terms of short-term expectation of what price may do. Like everyone is looking for a consolidation, which I would be a huge fan of, right? Maybe even a pullback. But the point of that first chart is to show that if we do pull back into these levels, we have strong and clear support levels where we could then be adding more to these positions that you might not have been able to get in. That's the point of kind of highlighting this bottom panel is you can kind of see when we get to extremes and then we break back into the range, that's the signal. So you don't sell here when you get above 80. You sell when we correct back below 80. Same thing with when you get below 30. You don't buy when you get below 30. You buy once you get back above 30 on those percent above the 20-day moving average. So just incorporating a little bit of breadth into the context of the S&P 500, because I think a lot of people are talking about exhaustion, but that exhaustion, when we correct a little bit, that's probably going to be a buying opportunity based on the breadth thrust and the strength we have underneath the surface for the market. But I'll shut up now for a sec.
No, I agree, Larry. I think that's, you know, the breadth analysis to me is everything, because that's the same reason why I moved to international so heavily. Is the breadth in international was great, the breadth in the United States was bad. Now the breadth in the United States is finally starting to turn up. Semiconductors are in a buy signal. So many is relative to SPY looks great. So when I see things like that, I can't be anything but bullish because it's just telling me to be. And same thing with this chart. This is a very bullish chart. Now, nobody likes to buy things that are extended or overbought. I hate both of those terms, honestly. I think they're most of the time they're just ways to say, like, I should sell out of my uptrend. And most of the time it's hey, you should continue to hold this depending on your time frame. If you're shorter term,
For sure.
You're buying the pullbacks and so on, whatever. Maybe you're different than I am, but me, I like to just chill out, go hang out with my bees outside. So I don't want to be trading in and out of things all day long. I want to be long something, and I want to just run a trailing stop and an exit and just sit on it. So I love this chart. I think this is a really good way of looking at it because of everything you just said, the context around the price action. That was well said. Love it.
And to piggyback what Jason is saying, go to the next chart, Spencer, slide 3, and we'll highlight this is where one context, and that's where we try to add value, right? That's where JC, this entire team tries to add value to price action in terms of understanding the context of it. And for Jason, I know Jason trades a little bit longer time frame, and honestly, I do too. I do more positional trading. So I know when I was on several weeks ago, I was like, hey, I'm still waiting for signals in the US, right? Which people are like, we're up 10%. Well, when we got the signals, now we're seeing the follow through in those signals, but that's because it's a longer term trading perspective. But the point of this chart is to highlight you have mainly US, right? But you have the US stock market here kind of broken down. And you see the 20-day percent above the 20 days, all basically sitting around 80. But look at the 200-day. Some of these trends are just now restarting. And that's where if you're a longer term trader and you have that longer term perspective, if you're selling because of short term extension in price, you're missing the boat. You're missing the context of what people are talking about when they say extended. They're not saying long-term extended, right? They're saying short-term, this rally has been strong, which is bullish. That created a lot of these breadth rush we've seen. But we could just be getting started when it comes to reclaiming those 200 days. So I think the consolidations here are going to be buying opportunities as a whole.
Yeah, and looking at stock, I mean, the 200-day stocks above the 200-day is one of my favorites. But if you back test it, above 40% is actually where you want to start buying. And I'm sure you've looked at this too, Larry, which is like you want to start buying. Same thing when you're looking at your above 20, the 20-day moving average. You depends on your time frame, but really, if you're a long-term trader like we are, above the 40% level, like that's where you want to start buying. Small caps haven't even clipped that yet. That's kind of interesting. They're just right now starting to get going. If we're looking at the NASDAQ, I mean, that's really probably the trouble zone at the moment, but that's also showing a lot of strength very recently. So I think the market's in good shape right now. I just think it's a good time to be cautious of what Larry just talked about, which is a pullback. A pullback is probably an opportunity to buy. I don't think we're going to see it. Everybody's calling for a double bottom. Everybody loves double bottoms. They're like, it's double bottom. Like
everyone loves a second chance, right?
Yeah.
Everyone loves a second chance.
Honestly, like in the beginning of my trading career, I saw a lot of those happen where we'd retrace, hit a double bottom. Now, as years have gone on, I want to say basically since 2016, I just don't see many of them. Most of the time, the market spike bottoms and then it goes higher. So I wouldn't doubt we just saw another spike bottom, especially when you look at how sentiment looked before this happened. Like before the rally, sentiment was so bad. Sentiment is still pretty bad. It's still pretty bad. Like people are still talking about the recession. People are still saying this is a false rally. And that's what I want to see, honestly. Like
exactly.
I want to see that.
Yeah. Exactly. And it's funny you bring up the double bottom, because what did double bottom? Bitcoin. Right? Bitcoin was actually a double bottom, which is funny for people to talk about not being in Bitcoin, but wanting a double bottom, right? It's just people picking and choosing and cherry picking their arguments, because Bitcoin made a double bottom around that, 75K level. We tested it back in March, and then we tested it again here in April, and it kind of let off the lows there. And so, yeah, what you're saying is exactly true. And I think it's funny because you and I are similar in this regard. I don't think you need to predict the future. And when we were trading, when the S&P 500 was trading back to its prior cycle highs, that 480 level, the VIX was at 55, right? Anyone who studied history knows, and we were sitting at the 200 week, which anyone who studied long-term uptrends and understands capitulatory evidence, how do bottoms occur? Capitulation and follow through. What have we had? We've had capitulatory evidence week after week, and we've had very strong follow through. And then what have we had? We've had disbelief because it's been too strong. That's perfect, right? And so I think the next chart, if you go to that one, Spencer, this is a chart I wrote about yesterday on Thompson's 2 Cents. Shout out to that little blog I do twice a week under the stock market media umbrella. But this chart highlights what the chart of charts. I call this the chart of charts, right? Because it's the S&P 500 equal weight. And to me, this is significant because it symbolizes a failed top. And Spencer kind of brought up a lot of charts look like that, scoop and score pattern. Well, if you use the S&P 500 equal weight, it's telling you 500 stories. And what's it telling you? It's telling you that we had 3 days of consolidation above the 200-day, which people wanted consolidation, and they got it here. And then yesterday we had a bullish engulfing candle that ate the past 3 days, and also the volume was pretty strong. So to me, it's just, I think if the index gets overheated a little bit, I think there's going to be opportunities within. Like you said, you can look at some industrial names. You can look at low volatility names, because in bull markets, they all do well. It's just a matter of how you rotate into them. Whereas a bear market, the rotation is on the other end. And so I think as people might say, hey, tech's getting a little extended, or these areas are getting a little extended. For example, software getting a little bit extended maybe, but guess what didn't? Semis. Semis are now kind of rebounding and getting into that buy signal on that higher time frame. So just interesting to me, because I think you can find the narrative you want to fit, but if you're actually digging through the charts, these are becoming more opportunistic than it's been in a while.
And another thing that's interesting too is if you look at the 200-day and you go, okay, we're above it, we're consolidating, that usually is a very good sign of moving higher. You actually want to see 3 days above the 200-day moving average. Is actually probably the best indicator that you can have that this thing's going to move higher. So there's a bunch of bullish evidence here, and it's kind of happening over and over again as we look at this. So love all this stuff you brought today, Larry.
I do want to talk international with you. So the next chart, Spencer, the next chart is international. So I wrote about this last weekend, and then obviously one of the things that's hard here is you're talking about charts that are breaking out, but I buy breakouts. Right. So I think there's two things from a context perspective, because you'll see here within EXI, I'm going to share a lot of breakouts. There's two things you can do with that information. One, you can buy a breakout, but two, you can monitor these charts, because in a bull market, breakouts see continuation. And so what you'll see is the Ubers of the world, you'll see the EXI, these companies that are making all-time highs continue to see follow through. And that's part of the signal. But this is something to me, I think people sleep on industrials as a whole. And I know we've gone back and forth about international exposure. To me, I think you can get similar exposure via the US, simply going into value or industrials or financials to some degree, right? It's not the exact same trade, but it's more ongoing joke we have between each other. But I think
I like this. I'm supportive of this idea.
Yeah.
Well, look, it's kind of like, okay, you look at something like Spotify, everybody would say, okay, I'll buy that, but that's not a US stock either. So it's kind of like understanding that it's our own biases. Like you said earlier, Larry, if we're looking at the US stock market, everybody's going, yeah, I want a double bottom, that's what I'm going to buy. And then you look at Bitcoin and go, well, that's a double bottom, I'm not going to buy that. Are we price action traders, or are we, fundamental trader? Like, it's a thing you have to identify for yourself. Because for me, it's like I'm a price action guy. I will take the signals wherever they come. If they come in Russia, great. If they come in the United States, great. It doesn't really matter to me, because the idea here is like, one, I'm a manager of money. I manage other people's money. My goal is to keep their money growing and not lose their money. So the only way I can do that at certain points is continue to move to these different areas and do that well. So I think it's the same thing. But on your point, I agree with that fact, because I think there's still like the trade of, let's say we're in a weak dollar cycle. Yep. Energy should still move. Gold miners should probably continue to move. Industrials should do well. Materials should start doing well. So there's going to be places inside the United States that you can still buy, but you just have to be very selective on it here. It's not a good, it's like Larry said, it's kind of a value time or stock picking time where you got to go through and go, okay, this is exactly what I want. This is the exact sector I want to be in. This one's showing relative strength. I mean, utilities are even looking good. So, but the thing I think my biggest idea here for the next year is probably, if we're looking at the S&P 500 and we look at this over 50% allocation of technology, if you add in consumer discretionary, which is mainly Amazon, if you add in communications, which is Facebook and Google, I think those sectors that are unloved, that are only 2-3% inside the S&P 500 at the moment, whether it's materials, utilities, or energy, I I think those are going to start becoming bigger parts of the S&P 500 soon going forward. And I think that's going to be where you're going to get the alpha over the next couple years. But once again, take the signals as they come. We're long semiconductors once again. We're getting long some of these things in the United States once again because they're showing strength. So just go where the strength is and you'll make money, and don't care where it is at, even if it's in Bitcoin or, China.
Yeah. I think you'll love these charts, Jason, because if you go to the next one, Spencer, these are just an FYI. These next couple of charts are stocks within EXI. But to Jason's point, this is exactly what I'm doing for people is I'm taking an area of the market that is doing well, and I'm showing you how underexposed to it you are just buying the S&P 500. That's the whole goal of this analysis I did over the past weekend was look at the weight in ETFs for something like Carrier Global Corp, right? Reclaim the 40-day, beautiful bottoming pattern, breaking the downtrend here, and right, not back to all-time highs yet, but a leader in this regard. You have 0.12% exposure buying the S&P 500 to this, right? You buy XLI, which, like you said, is only 9% of the S&P 500. You're getting this 1.5%, almost 2% exposure in something like this. Or if you look at something like EXI, which gives you a little bit of industrial exposure, you're getting almost 1%, right? That might seem small in an individual basis, but if you get into these names and you have 4, 5, 6, 7, 8, 9 charts, right? Or, a couple of ETFs that have that international exposure, you're then actually diversified, which back to your point you guys were talking about before I hopped on, you don't necessarily have to vol limit, but if you get uncorrelated assets, naturally you can limit the size of your drawdown because of the lack of correlation. And then that allows you to then sit in a market that's going down in other assets while the other ones go up. And over time, right, that compounds, which is, Mulvaney to a degree.
Yes, and that's if I'm looking at like what my real strength is, because a lot of people go, oh man, you're in these positions, you have leverage and things. It's my drawdowns are small. The reason why they're small is because of the diversification. Because I go long and short, because I trade all over the globe, like those things will help you make money. So this is a good trade to kind of diversify your portfolio. And if you're really just following strength, you don't have to think of correlations as much. Like if you're just following like what Larry's talking about, okay, we see a stock here which is starting to outperform the S&P 500 that has global weightings in these different ETFs and so on. Like it's going to give you that diversification that you want as a trader. So I think that's one of the biggest strengths that a lot of people need and don't have, which is even the ability to buy gold or the ability to buy short bonds or the ability to buy international, whatever it is, or crypto. Whatever it is, it helps you diversify so your drawdowns are much smaller, your volatility is much smaller, and you can sleep at night. It's nice to sleep at night.
Yeah. Spencer, can you skip to slide 8?
I'm not sure that's possible. Okay.
Baller. Love it. And to Jason's point exactly, I think, right, you could just look at strength, but then know what you own if you're owning just the SPY, because a lot of people talk about Uber and it's an American company, but people think they're getting exposure to it buying the S&P 500 when
really do they do people think
I bet if you ask the average Joe what percent of the S&P 500 was Uber, they would not say 0.3%.
Perhaps.
I had a retiree tell me the same thing Larry's talking about here. So that is true.
I guess there's
crazy, but it sounds crazy, but it is true.
500 companies. What are the odds that any of them outside the top 7 are going to be large, right?
Well, they think Uber is one of the top
large.
7.
Exactly.
Okay.
Yeah. And I guess I'm probably speaking my age, right? I'm 29, 30. Yeah. There's people in my age bracket, like they're on Ubers every single day. And then especially if in the cities, they just think it's a larger portion of the S&P 500. So the point isn't whether or not you think that, but to know it, right? To know that if Uber is breaking out of this base, right? Maybe look at industrials a little bit. Industrials are extended as a whole, right? This is something I wrote about a couple weeks ago, but it's just back to that point that you don't have to sit in the index if the index is overheated, or you wanted a double bottom. Look at individual charts that posted double bottoms, right? Maybe as the index as a whole is so concentrated in the Mag 7 that you're not necessarily going to see the double bottoms that occurred underneath the surface. I just thought Uber was a great example of you're getting 4% exposure in XLI and you're getting 40 basis points in SPY with something like Uber.
It sounds like you like XLIs. That's what I'm getting at here.
I like a lot of the industrials that's just a space that obviously now the charts have broken out. They've showed some extension, but a couple weeks ago I wrote about it because I think industrials as a whole, based on, not to get into this, but like the way Trump thinks about America is like his voting base works for a lot of these types of companies in general, right? The Ford, the GMs, those type of companies. And if those companies are doing okay, that to me was, hey, maybe this recession talk isn't what it seems to be, because industrials had like 80% above their 20-day 3 weeks ago. It's like, that to me isn't a sign that this recession fear is something that people should be looking at. And so that's kind of one of the reasons.
It's 20 days. It's not exactly the strongest of trends, right?
Yeah, but it's short term. Well, look at it on absolute basis, but it's short term strength from that bottoming process, where something like home builders have kind of still been struggling to get off the mat a little bit, which is more of a rate sensitive area than necessarily solely economically based area, if that makes sense.
Yeah. Okay. It does.
So we don't have to go through all these, Spencer. I do want to talk real quickly about EQAL, chart 12, slide 12. Because, right, I get people aren't breadth experts. They haven't spent all their time studying breadth. If you need one chart to understand very largely the breadth spectrum in the United States, it's EQAL, right? Russell 1000 equal weight represents over 90% of the stocks in the United States. And we're reclaiming key prior cycle highs here. And so I just think to some degree, right, to maybe counter Jason's point, the breadth is so strong, we might not even be in a stock pickers market, but we are from a perspective of the rotation, right? All stocks are doing well, but the point at which they're doing well may be rotating. So I think it's a good time to be running scans, looking for stocks near new highs, new 30-day highs, right? New 1 month highs, because you're going to see that, it might not be a tech stock. It might be, you mentioned utilities, which I think look interesting. And actually, I have an energy trade in here, which I brought for you that I thought was interesting. But yeah, I don't know if you ever look at, the Russell 1000 equal weight. To me, it's just like a very large breadth.
Can't say I do, no.
It looks very similar to the value line, and like
exactly
all and that's all you want, that's one of the best indicators of it. But I agree with you on that fact. It's like, if I look at the portfolio at the moment, from semiconductors all the way to Poland, like I'm definitely seeing like, hey, we're kind of in this market where everything's going up at the moment. It's Goldilocks. It's a Goldilocks market at the moment, but will that continue? I'm not sure. But I think like Larry said, like, continue to look at your scans, continue to find relative strength. When you find relative strength, because the idea here isn't to perform in line with the S&P 500. Like, if we want to do that, we go get retirement funds and walk away. Our idea here is to outperform the S&P 500, whether it's up 20% on the year or not. So we need to do that. We need to find relative strength. And where do we find that? We're going to continue to find that in areas that are outperforming. At the moment, gold miners are outperforming, quite a bit of a pullback at the moment, but these are outperforming areas, huge trades for the year. But we're also starting to see it in industrials. It's starting to come back in the United States. Semiconductors look really good. All of these things are kind of showing us relative strength is alive and well in a lot of areas now. So you guys got a lot of things to pick from, a lot of things to buy, and a lot of ways to make money.
Facts.
All right, everyone drink. Jason said Goldilocks market. Everyone take a shot.
Look at if you go to the next slide, Spencer, I just want to get Jason's thoughts on, this is a chart I've looked at for a long time. I think I got it from John Murphy's, the blue one, Intermarket Analysis.
Intermarket Analysis. That's my favorite. Yeah, it's a great one.
So I have that on my back wall. But this is one because people keep asking me about what I think of bonds and what I think of yields, right? And to me, I see it as they're at the bottom of the range, but that's a mean reversion trade. I don't see this as yet like if you're a trend follower, buying it here because you think the trend is breaking out. To me, it's like the energy, which I have next, but like energy is now that mean reversion back to the top of the range. And I think it's perfectly healthy if we keep sitting in this range. And I think that's why Powell to some degree is like, I can wait and see, because this isn't spooky to me, right? We've been going sideways for 3 years, and it's all people are talking about is sideways for 3 years. Like that to me, it seems interesting, the narrative around it for something that is really just trading sideways.
Yeah, so yields here are very interesting, and this is going to be probably everybody's going to go. It has to go with the dollar, and once again, so the dollar, for people who don't have a chart of the dollar up right now, the dollar got hit in January 2025, and now it's bottoming out, bouncing a little bit at the moment, and so everybody's going, yeah, the yields have to go down. I'm from a very different school of thought. I definitely see that the correlation changes over time. There's been many times in my career where that correlation has been very different. Go back to 2018, 2019, for example, the dollar is moving up as yields are moving down. This correlation changes all the time. So I do think that yields here, perfect. Just like you said, if they stay in this range, good for stocks, good for just about everything. If they start to break out higher, that's when things get a little bit messy. I think that energy will absolutely follow it and probably be the place to be. I also think oil will probably follow it and probably be the place to be. But at the same time, it's a wait for that to actually get above the range. And once that gets above the range, then I'd be more interested. But energy's just been a mess. It's just been sideways, a sideways mess. And nothing against it. It was a great trade back in 2020 and 2021, even 2022. But now it's just gone sideways. If this thing breaks out and finally gets up higher, like I would above 100, above 102 even, this thing's probably going to take off to the upside, hit 120 probably pretty easy, 140 probably pretty easy. But once again, it's a wait for that to actually happen.
Yeah. No, and that's like my exact thoughts. It's like I don't understand why people are rushing that process, because we've seen it fake out for 3 years now. Not that, right, kind of like gold. Right, everyone's talking about gold. It kept failing. But when you have signals, then when it breaks above that level, that signal gets triggered. You analyze the chart and you get in. But I think I've kind of rushed the energy trade. If you go to the next slide, Spencer.
Oh, me too. Yeah,
I've rushed. This is just shorter.
Yep.
I thought we're waiting for a signal, Jason. What happened?
I am. It's this false breakdown signal. So I have a 100-day false breakdown model that actually does trigger, just like Larry has it pictured here. However, I still, even myself, I'm like, this is too early.
Yeah. But for me, it was an interesting place, because kind of like if you've painted the picture a little bit, we started with bullish market, maybe extended in some areas, but some of these areas are just now reclaiming key risk reward levels for a trader. And to me, when I trade versus when I'm looking at my investments, more systematic with my investments, when I'm placing trades like this, it's just, do I have a clean risk reward scenario and something I think there could be some rotation in? And this, even if it just gets to the top of this range, we're looking at 7-8%, right? But with a clean risk of like 1.5%. So that's why I like this energy trade here, to just kind of catch to the upside a little bit and maybe get everyone worried, because these moves will be, you can see in this chart, energy goes up for 5, 6, 7, 8, 9, 10 days in a row, and it gets everyone panicky. It doesn't just go up one day, consolidate. So I just think there's a trade here. As I said, the investment comes when we actually get out of this range. But the trade here, I think, is that false breakdown trade.
No, I agree. I think it's easy to move to the upside, and honestly, if oil, to me, oil has to start to move. If oil starts to move, then this thing will really take off. At the moment, oil just keeps getting under pressure. There was a big false report about OPEC coming out, and they're going to flood the market with oil or whatever. That comes out once a year. Everybody then sold off oil. And next thing you know, oil starts to bounce right off of the lows in that range, and it started to move higher. I think if oil can start to get above 75, 80, if we can start to get above those levels, that's when we start to see energy actually take off. But until that happens, I don't think energy is going to get above the range. But it could happen at any point. That's the problem with it. It's like oil is very volatile and very finicky, and it's been holding those lows for a long time. Either it's going to break down nasty, and then we're going to be in a deflationary style market, or it's going to break out, and we're going to be in a stagflationary style of market. And so once again, keep that one on your watch list. Watch it, and it's going to tell you what type of market we're going to be in, where you should be investing, and where you can make money.
For sure.
All right. Why don't we do some recess and we can get out of here?
Sounds
Yeah,
good.
yeah.
Oh, it's the weekend. Let's see what's going on. Who wants to start?
Larry.
Recess. Cool. Shout out to farmers markets. It's that time of year here.
Yes.
Yeah. South, right? And the pool opens this Memorial weekend. So shout out to summer. I'm excited to get back in the pool, get the tan going. And I got the in-laws in town. So yeah, excited to go to the farmers market, get some fresh eggs, some raw milk.
Farmers
Should
markets,
buy down here,
a great
so.
place to spend a Saturday and Sunday morning. Spend an
Bingo.
hour. Yeah.
Bingo.
Love
So
me
farmer-
a farmers market.
Farmers market season is upon us. Bullish farmers markets. Just
Love
fun, right? A lot of people are just down there eating a cinnamon bun, looking at healthy stuff.
Mhm.
But shout out to those people too.
That's right. That's right. I'll go big night in New York sports. We got the Knicks tonight, trying to get to the conference finals for the first time since I was 9 years old. And then we've got a Subway Series, Yankees and Mets. Juan Soto returning to the Bronx. It's going to be fun. So, big night for New York sports.
I'm excited to see that. Brunson, man, he's one of my favorite players. Love watching that dude play. So I'm excited to see them possibly close it out. But once again, it's Boston. You never know. So this would be a tough one.
Fingers crossed. I have been. I don't want to say I've been short the Knicks. I've definitely been like flat the Knicks. I mean, I'm like long term in long. I've had a long term position. But I have been watching this breakout more or less from the sidelines. If this were a trade, I wouldn't have taken it because I thought there's no way they can beat Boston. And here we are. We're on the precipice of a real breakout to 25-year highs. So I might have to just start getting back in here.
Nice. Yeah, for me, I'm this weekend is just more flowers, more plants, more bees.
How are the bees doing, Jason?
Bees are doing great, so at the beginning of this year, it's kind of like you got to feed them at the beginning of the year because there's nothing really out there, and then once the spring flowers start to come out, they start to go to those. They don't want anything to do with you or anything, so they start to go there, which is sad for me because I like to watch them all hang out and eat food next to me like a weirdo. That's what I do. But yeah, no, I've hanging out with the wasps, hanging out with the bees, that's what I do. So just kind of doing that, fixing up the backyard. That's about it.
All right. I personally, I like it when the bees want nothing to do with me.
I love when they want to hang out. They hang out on my arm sometimes, like I got this bee tattoo actually, it's pretty endless. I love bees.
Nice. Well, the world needs people like you that love bees for all the people like me that don't love bees.
It's funny though, Spencer. Check this out. So
I'm checking.
Probably 10 years ago, I was terrified of bees and wasps especially, to the point where one came in the house. It was right when Beth and I got together, and one came in the house and it came at my head, and I'm not that nimble anymore. I used to be very nimble, and I was standing on my feet and I did a straight backflip as the wasp came at my head, like the Matrix, backflipped right to my feet again. That's how afraid of wasps I used to be. And then years ago, I was outside and I'm watering the garden, and I have a wasp just watching me every day, and it was freaking me out because I was like, why is this dude watching me every day? And then I accidentally sprayed some water on the floor and it just went to the water. I was like, oh, it's just thirsty. And then every day I just gave it water, and then they started just hanging out, and I'd just be hanging out on the chair and it would just land on me and stuff, and it's pretty interesting. And then I found out that they don't live that long, so somehow they knew about me. So there's an interesting theory on that. We can get into that another time because it's very deep, but wasps do have memories from their parents just like we do. Yeah. You ever heard of I forget the experiment, but it's done with cherry blossoms and mice. And so basically, they create the smell of cherry blossoms in the mother, and then they see if the kid has it. And then the kid runs the cherry blossoms the same way as the mother did, even though the mother never showed them that. So we also have that thing in our own body from our own parents too. So there's a bunch of really interesting things about that, but let's not go down that rabbit hole.
Jason, we might need to give you like just a 1 hour special to talk about bees.
I could talk about bees, and psychology and humans for like years. So I'd love to do that. We could do that one day.
Damn.
I got so many bees in my yard. We have like, my wife is obsessed with plants. We just got planted a couple hydrangeas, but we also have carpenter bees eating our deck. So that's kind of a pain in the butt.
Well, you could spray WD-40 on the spots if you don't want them eating your deck. Like, and not to mention, I just put up anything that's untreated wood. I just put it in the backyard, and then they just kind of go to that because they don't really like treated wood. They love untreated wood though. They'll go straight.
So create a little spot for it to eat.
Yeah, and then they can go over there and make their own homes in there and just leave you alone and not eat your deck. So
super fair.
Yeah.
Our yard's covered in we have basil, mints, the whole nine.
Oh yeah, they love that, man.
Yeah, they love it.
Yeah.
It's fun.
Yeah, I love seeing them. It's fun. It's soothing, and not to mention, here's the last thing about it. While I get onto one last weird point.
Please.
So your brain, you have a nerve in your brain called the vagus nerve. It's not in your brain. Sorry, it's in your throat, but it connects to your brain all the way to your stomach. To wake it up and vibrate it, and this controls everything. To wake it up, vibrate it, and keep it healthy. Noises that the bees make actually do that, which is the reason why beekeepers actually live the longest. So
I've never heard that.
Yes, so beekeepers are actually live the longest out of any profession. So that's like really interesting because it's like you're telling me the person who goes out and gets honey and like hangs out with the bees all day, they live the longest, and yes, that's actually true.
Yeah, I'm just impressed you're able to keep them in Ohio, right? Because down here, I'm in South Carolina, for those unaware. But down here, everyone has. We'll go to the farmer's market tomorrow. There's people making cloths out of like beeswax to then cover your dishes in your kitchen. Like beeswax is very, very common. Bees are super common. Yeah,
Winter is just it's a time where you just got to feed them differently, do things differently. But once again, this isn't bad. I couldn't imagine like people order bees from Saskatchewan, Canada. Like that's all the way for people who don't know, that's above Alaska. So it's like, I don't know exactly like what they have to deal with.
Yeah.
Like that has to be terrible.
Well, some parts of most of Saskatchewan is below Alaska.
People get them from Saskatchewan because they're supposedly the toughest bees. They're supposedly the ones that like will defend their hive and you don't have to worry about them. Like, so it's and they also, there's Siberian bees too. So like you can get them from a bunch of places. Anyways.
Good stuff.
All right.
Anyways, let's get off the beat.
All right, let's do this. Market's open. We got things to buy and sell, or neither. Louis Sykes is going live for his members of AAC Crypto at 11 o'clock. Steve Strazza is doing a weekly strategy session for members of Breakout Multiplier. That's going to be at 3 o'clock Eastern time today. We'll send out emails about it to make sure everyone knows. And that's it. We'll be back on Monday. Hopefully, JC and Steve, they'll be back by then. And we'll do. And Jason, you're on Monday as well, so
yes,
we can do this
there
all
we
again.
Go.
And Larry, thanks for joining, and everyone, thanks for watching. Chat, thanks for chatting. Have a great rest of your day. And just as I say that, Louis says he can't do a crypto stream. His voice is shot. He's going to send some out to his members. So no crypto stream today if you're in AAC Crypto, but we'll figure it out. All right. Everyone have a great weekend. Enjoy the bees. Enjoy the farmers markets. And go make some money. All right.
All right, guys.
Cheers, guys.
See ya.
See ya.
Larry. Later, Spencer.
I can't take no loss. I don't even know what it costs.